What's up, YouTube? It's Joe Catchpollia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to give you an important message that you don't worry enough about losing money. Um, so yesterday, I bought some of these tokens in 10724 Gooding Ave. Cost basis was $8.50, some of the cheapest tokens I ever picked up. When I bought those, I did a very quick due diligence because, the price tanked. It seemed like a very attractive price, but I know, that's not necessarily the case. So, I went through a shortened due diligence, but most of my regular steps, right? Looked through the Discord, I checked the public records to make sure that Lofty is actually holding the title, or the DAO is actually holding the title. Looked for debt on the property, um, the flood zone, try to figure out what exactly was going on to make it so cheap. And I posted about it because somebody else had posted in the Discord that they had bought some um, yesterday as well. And I posted this with my cost basis and said, I did a protracted due diligence, but I bought some myself. And somebody made the comment, and I know it was mostly joking, right? Like the only due diligence necessary with that price is YOLO. And I think that as much as I'm sure he was joking, right? Because that's Brocipitus Maximus or something like that. He appears to be a pretty conservative investor, completely avoids debt and whatnot. So I don't think he was completely serious with that comment, but I think it's something that a lot of people think on this platform. They think like, the $50 really anchors in a lot of people's heads. And so like, okay, this looks like it's over an 80% discount. But is it really? Well, I think this one was a pretty good buy for me, right? I think that the market price is already up to 1340. I could sell it today, make a really quick return on it. I think there's a little room for it to move up, although I did post my 10 tokens for sale at 14.99. So if anybody wants to limit buy those, I'd be perfectly happy getting out real quick off of that dip. I think a quick solid return is better than a slow burn to maybe do a little bit better, and that's what you've seen me do over and over on Lofty, right? But just thinking about that a little bit, there are properties on Lofty that I would not spend $8 on. There's some that I think, so it made a little bit of a discussion in the Discord. And if you don't know what I'm talking about, in the description to this video, I have a link to a Discord I have set up. There's about 110 of us now in there. Just people that jump in there, talk about Lofty, talk about Mogul, Ground Floor, Saul's Lot, some Arrived, some Collab, just basically fractional real estate in general. Um, so you're welcome to join that. Just click on that link. Also, in the description to this video, I have links to all the places where I currently invest in fractional real estate online. I just mentioned most of the companies. Please do your own due diligence on all of those platforms and any properties that you see. Just because I buy them or not, or use a platform or don't, doesn't mean it's the right answer for you. Also, please like and subscribe, and there's a bell somewhere. I've never used the bell, but you should use the bell because it does something for you. Um, so anyway, there are, so we had that discussion in there, and there are definitely properties that are worth, so I mentioned that back when I worked at appraisal, there was a property that we appraised at and came up with a value of negative 250,000. It was a big commercial property. It seemed like it should be worth millions, but it had just a ton of, environmental liability. There were just all these issues that impacted the price to where if somebody was going to buy it, even if you gave it to them for free to develop a property on there, they'd probably lose money. And it did sit vacant for several years. And I want to say that I didn't follow it too closely, but I want to say I saw that a township took it over eventually and then did some of the remediation and then did something to get it going again, right? But in general, real estate can go to zero and it can go to a negative, especially the entity price can be a negative, right? Because even if the real estate's worth something, there could be debt that brings us into the negative. So I want to give you a couple examples, and I want to of ones that I think are still extremely overvalued or could be. Um, And so this first one, so Earl had jumped into that discussion. If you don't know who Earl is, you must be new to the channel or not in the Lofty Discord at all. But he's a co-owner of several properties on the platform, manager of a bunch. But he jumped in and said, "Hey, if you own this one, maybe the price, maybe it is really worth zero." So it made me want to dig into this one a little bit. You can see that the current, there's an asking price of 17.99. There's only limit orders. There's no market orders on this, but there have been trades of this token for as little as $1. And honestly, that $1 might be overpaying. Um, so what's going on with this property? It's been vacant for a while. There's a foundation problem. Apparently, the city won't let them repair it. Um, there's a huge amount of money to rehab it, and so it's been listed for sale for, as a vacant unit for quite a while at 40,000. They got offers as low as 9,000. So it's not zero, but 9,000, right? But currently, they didn't take those offers. They don't have any on the table. At the time, I think the owners were unrealistic and were trying to get 25,000. Now they looked at, okay, well, what's the land value? Uh, and okay, it's going to cost us $20,000 to demolish the house properly, and we might not get $20,000 to sell the land. Um, there is a small operating reserve at the moment. So there's been all sorts of different discussions about, could we just take that, disperse the operating reserve and then just let the property get taken back, um, and then it's worth zero. So then, okay, maybe let's see, how many outstanding tokens do we have? 1,600. So if you got a piece of that operating reserve, maybe you get a little bit of, maybe you actually do get a little bit more than $1 each. Um, Provided that plan works, right? Because one of the problems is if you leave a property vacant for a long time, you're accumulating liability. And I know some people think, well, if we take all the operating reserve out of the property, then we have no liability. And again, I'm no longer an attorney. I don't give legal advice. But one of the ways that I have heard of, and that is a possibility to go after, the piercing the corporate veil of an entity, is when that entity is intentionally drained of all funds when they know they have additional liabilities, right? So taking those funds out when you know that there are expenses could lead to, some future creditor going after the actual entity owners. Is that going to happen? Is it a very big risk? I don't really know, but it's not a risk-free deal to do that. And I know in other things they've talked about is like trying to donate the property to Habitat for Humanity. They tried to give it to the fire station to let the fire station just burn it down, and then they were going to try to sell the lot. And the fire department said, "Oh well, it's too dangerous for us for us to burn down. It's not because it's the property's just unsafe, and it also may be because the proximity to neighbors or the trees or whatever other reason, but they decided it's unsafe. So, no future. There's no reasonable future for this property. Maybe you can get someone to come in and get another offer in the $9,000 or $10,000 range. Um, but if you do, what are you actually getting there, right? So you get $10,000 even after everything's said and done, and then we're dividing that by 1667, and then okay, and plus another buck and a half from the operating reserve, so you get like a little over $7 a token, right? So maybe this doesn't go to zero exactly, but it gets pretty close, right? If this had dipped down to 850 yesterday, and I bought it at that price, uh, there's a good chance I was losing money, right? And that's the real point that I want to make. Like I feel like there's always a bigger chance of losing money than people are expecting, even once they get to like very low prices. So, like one of them, there's a lot of people that have been jumping into Brownfield because it's like, oh, well, it's a 40% discount, right? Like you can see, uh, there's a decent amount of, all these transactions were, well, yesterday at this point because it's after midnight, but all these transactions were in the last 24 hours. There's people thinking, oh, that's a 40% discount. Well, let's remember how the debt works, right? How debt works and how your tokens are. So there's about $2.5 million in debt on this property. and it was originally brought to the platform around 3.2 million. Well, let's say it's actually just worth um, 2.8 today, which I think is being, we I did a longer video about this one, but I think that's being very generous to think that you could sell it for 2.8. Um, so let's say you did sell it for $2.8 million, and we have relatively low, commission and closing costs. Oh, okay, I meant to multiply. Okay, so 2.8 times 0.95. Okay, so then you get 2.6, right? And then we subtract the debt that was still outstanding. We have $160,000. Right? Well, how many tokens do we have outstanding? 19,872 is what you're dividing that by, right? Oh, so we have our 160 divided by 19,872. And if that's what happens, your tokens are worth about $8, right? Now, of course, I might be wrong about the 2.8. You might be able to, there's all these different scenarios that they're working on and trying to save it. But you can see that a 40% discount in the token is not equivalent to meaning, you know, uh, if you have 3.2 times zero point 0.6, you'd think that that means like I'm buying into this property at $1.9 million, but you're not, because those debt tokens, the 2.5 million is a lien for 2.5 million. There's not that money is not going to, that lien's not just going to disappear because the token value changes, right? And so, I've seen a lot of people be like, oh, this is an attractive price. And honestly, I don't know that I would buy brownfield tokens for $5 right now. Again, that's not doesn't mean that that's the right answer for you. You want to do your own due diligence. Certainly possible that I'm wrong on the actual value. It's just based on the research that I did. Like I said, I did a video about it. Fairly limited research. That's not a market that I work in. I don't have MLS access there. Um, I always get really nervous once I tell you what I think something's worth, right? Like when I tell you I wouldn't pay $5 per token for this, it does worry me a little bit because I don't want you to take that as, well, you should sell it for $5 and then okay, they figure something out and it's worth 30. But I just want to put that that math out there where people are just not this is not a steal of a deal. This is not a 40% discount on the property value. This is a 40% discount just on the token, and it's a completely different scenario. And I think, I know I did a video about this before, but I think this math just keeps getting lost on people because I think if it didn't, you wouldn't see all these people buying tokens today just because it was this cheap. Um, Now maybe those people think it's actually worth 3 million or 3.2. And in that case, okay, now you're really talking about something, and maybe they have some inside information about the plan to, one of the plans is for Waylick to buy the individual fourplexes. I'm super skeptical that they'll appraise it enough to even, pay off the debt. But I think it's possible, and so, I think with better management, this property could be worth 3.2 at some time in the future. But the whole problem is getting there, right? But my point isn't to like rehash all the issues with this property. Just really get into this math. I feel like just the people are always just looking at, okay, what's the discount from $50? That's a great deal, right? And so no, I mean it's very possible that you get a $30 token and you're underwater. I'm not saying that's for sure what's happening here, but that's what my gorilla math makes it look like to me. Um, I honestly wouldn't buy these from you for $10. Like it'd have to be around five for me to start thinking seriously about even wanting to buy some. And even at that, I'm not certain I would. I mean, maybe, and that's just I'm a very risk averse investor, and it's what's the where's the upside? I guess I would today because I know I could sell them to somebody else at 29 because people are buying them for that much right now. But in general, we're not. I feel like people are just not looking at how much the value can be stripped out of the entity aside from the discount on this token has nothing to do with a discount to the price in the real world. Now I'm going to give you one more example. This is one I haven't actually heard anybody talk about. um, The reason I want to look at this one, not because I think it's in any particular danger. I have no idea about this co-owner whatsoever. I'm going to show you a little bit of research that I did on it. But this is one, I picked it because it's a condo. It's in a market where prices have tanked. Um, and so condos in particular have an additional danger because the HOA fees, when those go up, you really have no control over that as an owner. And your HOA can foreclose on you for not making HOA payments. So there's a lot of additional risk in condos when you're highly levered. So this is one, it's just a long-term rental, um, brought to the platform by this guy named Matt. I'm going to give you a little info on him. Again, I don't know anything about him whatsoever, so this is more a comment on this structure, and it's the structure I keep talking about. But okay, so right now we're saying $46.50 a token, right? It's been somewhat stable, although you did have a dip all the way down to what is this? Oh, 38. Not even too low. Um, so a couple of things happened here. One, it went from being rented for like 3,200 a month down to 2,800 a month, right? Which is not a great sign. It's in Austin. Austin's really struggled. This is the Zestimate for it, right? At one point in time, worth all the way up to 715,000 according to Zillow. Today, maybe 416. When it was brought to the platform, it was somewhere around here. Um, I think we were somewhere around here. It looks like, your total market cap on here is 500,000, right? Well, why am I worried about this? Let's look at a couple of things. One, this is one that has debt. There's $330,000 in debt. Maybe not exactly that outstanding. I think I did open, yeah, did open the 323,000. Okay, so let's just think about this real quick. We've got 416 times, let's do 0.95. If you sold it after commissions, I'm using a small number because it looks like the guy's a broker. He's probably going to give his side a discount. Okay, so we're at 395. Not necessarily, but let's hope. Minus 323,050. Okay, 72,000 bucks. That's what if we had to sell it today, and that 416 is a real number. And again, we're just doing guerrilla math. That might not be right. This could be, this is you want to do more due diligence than this when you're trying to figure out if you should buy or sell something on here, right? But I'm trying to just illustrate the point. So okay, we've got the 72,150. We're going to divide that by the outstanding tokens. So divided by 3,469. Okay, so that would lead me to want to pay 20 bucks a token if I'm looking at the equity value of this, okay? But wait a minute, I am getting some rental yield, right? So what is, but one of the things I want to point out is this is another one of those deals where you're only getting that rental yield because the co-owner is making that loan payment. So if we look at all the updates, every month, let's see, the actual cash flow is somewhere around $1,000 a month. Okay. Okay. In January it was 1,200. But so one of the things, the HOA fee did go up, and so that's eaten into the cash flow. The rent's gone down, that's eaten into the cash flow. And then, but if we look at the principal and interest payment together, that's about 2,020 bucks, $2,021. Well, we compare that to the $1,000 in cash flow that the property actually generates. This is another one where we're in a situation where if for some reason the co-owner either couldn't or decided not to continue to pay that mortgage, the Dow could not pay the mortgage. They'd be $1,000 short every month to make the mortgage payment. And this is a perfect month, right? This is a month where you look at the financials and it's like, okay, all we're doing is paying property taxes, insurance, paying the management fee. This big utilities bill is actually representative or representing the HOA fee, taking the Dow out. Okay, then we only have this. This is that how you get to that just over $1,000 a month in cash flow. And again, the principal and interest on the mortgage statement is over 2,000 bucks. Thinking of it a different way, the principal, interest, taxes, and insurance is $2,788, and the rent is $2,799, right? So you have $11 to pay for management, to pay for the Dow fee, to pay for anything else. Oh, to pay for the HOA, right? So, okay, which we know is like $700 a month or 600, 6 or 7, somewhere in that range, right? So, like, there's just the rental doesn't even cover your principal, interest, taxes, and insurance plus the HOA fee, let alone any sort of yield to the Dow or anything. So, um, this is just one again where you're just 100%, the value is just coming from the fact that the co-owner has said they're going to buy back these tokens in 10 years. So that's, that, and the fact that they're paying the mortgage. So there is actually some cash flow to share. Well, hopefully anybody who thinks this is worth $46, like if I were going to value this just based on, the net value, if we're going to sell it, I got to about $20 per token. If we were going to value it based on cash flow, well, it looks like that's a negative $1,000 a month. So what do you pay for that, right? So for me to really want to be into this, again, I mean, I might want to be in the single digits or definitely 10, $10, and then maybe someday but like, that's again risk averse me because we've now seen several times where maybe if something happens where the co-owner can't cover those expenses, the Dow is at a huge risk here, right? And maybe I pay a little bit more for that if I do some due diligence on this person. I think it's unlikely. So I want to just share a little. I looked up his LinkedIn. He works in real estate in Austin, which is a good thing, right? I want someone local to the property. Like he's going to have a good sense of can we sell it? Is there a way out of there that way? Is there, he's going to be able to be a good hands-on manager if they need to be. Runs a real estate business, actually a couple, right? He's a broker and this TR3 Capital, which is like a fund. But what really made me feel good about him is he went to the same master's program I did. This is 7 years after I left there, and they changed the name, or less than seven, right? I left in December 2006, so no, 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 8 years, yeah. Um, well, it's a different name now, but still, it's still the same program. I noticed that because he's connected to a bunch of the professors that I took while I was there. So that makes me feel, pretty good. I think that it's a good program, and he should have some uh, good basis in numbers. Although it does make me wonder, like, well, how did we end up with a condo that has a negative cash flow? My guess is this was bought as a personal residence, but initially, I don't know that for a fact. I mean, who knows? But so anyway, has some good qualifications. But again, this is the company, a Texas guy in a this type of cowboy hat that gives a lot of comfort to people in this market, right? I know if you're in New York City, this might look like a weird picture to have on their thing, but especially if you went to A&M, this is 100% acceptable. So I want to make sure people realize that. I don't love, if you look at their track record for this company, I don't mean to laugh about this, but every single one of them is, they all have a 25% targeted IRR, 5x equity multiple, but they're all targeted, right? Their track record does not include one that has actually finished up. This is one that's in my market, and it is, I don't know. I don't have all the details of it, but I know when it came up and was listed on LoopNet, since I've been here, and I didn't have anybody that was interested in buying it, but it doesn't mean, maybe they got a real steal of a deal on it. Again, I have no real idea, but I'd feel way more comfortable if their track record had a bunch of deals that had already exited, right? Obviously it's not realistic because of the timing of graduating and getting into that. Um, but these are all things that I want to really look at and think about. Yeah, this is the actual community. I mean, it is, it's bigger than anything I've ever bought personally. It's about the size of the properties. The first company that I worked as an employee in commercial real estate, we would buy stuff just like this. So I have some sense of it, but not a deal that I've dug into at all. I just happened to notice it was one that's here. Let's see, you want to close that. And then other than that, this owner actually still owns the majority of the outstanding tokens, right? So it's not like he sold out everything and he doesn't hold a bunch. So maybe that gives you some comfort too. I want the real estate to be where the value comes from, right? I could sell it and make a profit on my token, or I could hold it and the Dow could actually afford the mortgage and have a decent cash flow. Like for me, those two things are absolutely imperative. If the real estate doesn't stand on its own, I'm not just gonna, I don't. I think that if you're just counting on co-owners with the limited information that we're given about them, it's a really you're no longer making real estate investments, right? You're investing in in a promise from somebody that we're giving virtually no info about. I mean, I don't even know. Do we get a credit? I don't even think they give us credit on ones like this. Yeah, yeah, they're talking about the tenants there, right? So like we don't get any info about the co-owner's ability to continue to make that mortgage payment. And if it ever got pulled into the Dow, like we're seeing now on a lot of different deals, it's a it just doesn't it loses money. So um, but yeah, that's I just want to give you that because this is just another example. It's a property that I think, what, and it's just I like I said, I really just picked it one because I knew Austin's a market that's tanked price wise, right? And so we'd have a negative there, and because it's a condo, and I know your HOA fees can eat it up. I didn't even know when I just picked this one that it was also going to have a rent that had gone down, but I think that you could really go through, oh, what's happening here? You could go through the marketplace, and I would bet, well, I'm sure that about 125 of them are properties that I think the token price doesn't match up with the level of risk and the value that you're getting, right? I mean, I've gone through almost every one of these at this point at at least on some level, and I've really only I found less than 30 that I'm interested in owning at the at the prices that the tokens are. That doesn't mean that's the right answer for you. Maybe you have a little bit different risk preference. Maybe you think um, a little bit differently about this stuff. But I think that if you're somebody who says, look at that token price, it's X discount from 50, and that is the begin I mean, that it's fine if that's like what attracts your attention to it at first, like, okay, let me look at this, right? But if if there's basically no dollar number that would make me just buy it without wanting to do the initial due diligence. And I guess that's my whole point today. And like I said, I mean, I know the comments in Discord were mostly joking. I think that just because it's so low, you can't get hurt, and there's not, you don't really need to do much due diligence. And I understand that to a certain extent. But one of the things that you have to realize, I think a lot of that comes from um, people that invest in other things like crypto or stocks. And so when you have a big pullback, it's much more reasonable to speculate in those markets because you have unlimited upside, right? And so when you have an investment where you have very limited downside at this point because of how cheap it is per token, uh, if you had an investment like that, but there's not any scenario where that token goes to 800, right? And so because you don't have this unlimited upside potential, well, at least not in any reasonable holding period, it's much more reckless to really just speculate in the same way that you can in some other asset classes. And so that's why no matter how cheap the price is, I really always want to do at least some minimal due diligence, right? I want to make sure the DAO owns the entity. Oh, that's one I wanted to pull up, and I forgot to pull one of those up. But I mean, some of these, you have tokens trading at 15, 20, $30, and the Dow doesn't even own the real estate. Now, maybe they have some legal claim to get the real estate back, but I would certainly not be paying anywhere close to market value for a token that has a theoretical claim on real estate, not actual ownership. I mean, I think, so that's one of the more mind-blowing ones to me. And I don't think it's zero, even though they own nothing, right? Because there is some, there's some chance you're going to get that property back, but it is, uh, you know, I want a good risk-adjusted return, right? And so on those ones, I might pay a quarter of what I think the actual value is, right? Because if we get it back, because that's just me, sort of discounting what I think maybe what it's gonna cost to get it back, or maybe what the chances are it'll happen in any reasonable timeline. Um, So, there's that, but like, you need to check that, need to make sure there's not a bunch of debt on the property, right? Because it's very easy, especially in a market that's gone down, and like again, that's why I picked the one in that Austin condo. It's easy for that to happen. It's easy to have a property that's like backed up on condo fees. I think the Euclid Ave one had a pretty big condo fee bills in arrears. I think they've since taken care of those, but again, like if you're not looking at that and adding that to your cost of sale, like it's very easy to have a property that maybe $50 or $40 per token did make sense at one point in time, but because of accumulated debt, because of accumulated deferred maintenance, some of these properties are just in such bad condition. By the time you spend the money to fix them up, you're selling them for almost nothing, after the cost of repairs, right? And so um, yeah, I guess I know I feel like I'm always, telling people to be careful, and I know I say do your own due diligence every single time, at least multiple times, but I think it really just hasn't hit people how easy it is to lose money on this platform yet, which is surprising to me because lots of people have already lost money on this platform. But I think it's perfectly possible to that some tokens on here go to zero. And I believe a lot of people don't realize that. They think, no, you're always at least going to have land value. You can sell it for that. And like maybe that's true on this one, right? But what if this was one that we had a, $8,000, $10,000 loan? I don't think it does though. But what if it did have, a loan outstanding to the ULD and then it ended up in this situation, right? Like you could easily have a situation where this was worth zero. Um, it wouldn't take much debt at all because we only have we they had offers for like $9,000, right? Like, and that seems like that's about the best it's going to do. 9 or 12 or 15, right? And how many of the DAOs have a ULD that's $15,000 or 12 or 8? So if you're not looking at what that is, and you're just like looking up, especially too, like if some people will just like look at the value of this on Zillow, just kind of like I did here, right? Like, oh well, what's that? Well, okay, I'm doing that thinking about like I think this is probably the best case, right? If I were going to dig into this more, I'd want to do a whole bunch more. So I'm just, really just trying to show you, make the point of how easy it is for one of these deals that look like a good deal to begin with to really become worthless. Like, and again, I mean, I'm not saying that this one is. I want to make sure that's clear that this 800 Embassy Ave is, or one is. I'm not saying that one's worthless because it is, but it is 100% a bet on that co-owner continuing to make the payments and to buy you out in the future, or maybe the Austin market coming back, to make it so that that's possible. But it's certainly, if you had to count on the property uh, covering the mortgage between now and the buyback period, you'd be in trouble. And and I mean that scenario doesn't really make any sense because like, well, then how are they going to buy it back if they couldn't pay the mortgage? Like, probably not, right? Um, the only point is like I think it's a good example of one that's trading at a pretty stable value that if we were just 100% focused on the real estate and ignoring the fact that we have a promise from some third party to make payments, uh, then I couldn't imagine anybody paying anywhere close to that, right? And so I'm hopeful that over the last several months, we've started to, a lot of people have started to wake up to the risk of this co-ownership model where the co-owner has agreed to pay the note and, the mortgage, and that's the only reason the properties work. Now, I'm fine with this structure if it's increasing returns, but if the DAO could actually afford to, to internalize that debt, I mean, that's, then you're just doing a little, it's still some financial engineering, but it's just tweaking the value a little bit. Where here, where you have one where the deal, where you have a negative cash flow, but for the structure, I mean, that's just terrifying to me. And I know I've said that a bunch of times, but I just thought, I really believe some of these could be zeros at some point in time. So no matter how big of a discount you get, I think you still need to just dig into the property, go through all the steps, check the flood map, check the title, check the debt, look at the market rents, look at market values, like all the things that we're doing every day when when new properties are coming up. All those same steps, no matter how big of a discount. Uh, and I know that I've mentioned several times when I'm doing my discounted token strategy that I'm doing less due diligence, but I'm still doing those things, right? I'm still like it's less. I'm not fully trying to figure out how does this deal work, but more and more, I'm actually doing more than I was initially too, because all of this wasn't immediately obvious to me. If you look at my earlier videos, it took me a little while to fully grasp the structure and fully understand the risks. And the more I know about the platform, the more I understand that. Uh, I'm sure at some point some of these will turn into zero value tokens. Um, or very close, right? Like a couple of bucks. The fact that people bought and sold these at $1, I don't think the people selling them at $1 were necessarily wrong. I mean, it seems like maybe they're going to be able to get $6 or $7 if things go well, but they're one like lawsuit at the property away from a zero. I don't know. Anyway, that's it. I am curious, what people think about this. This is the first. It's not maybe. It's one of the first videos that I've done. It's like really started from a Discord discussion. Hopefully, nobody feels like I'm picking on them. I do think that it's probably mostly joking comments, but I do, it is kind of like the idea, when people are like, on a scale of 1 to 10, how bad is your pain? 10 being the worst. And like the thing that I always think is funny is like there's always a new 10, right? Like it could always be worse than the worst pain that you've ever felt in your life. And I believe real estate deals are like that too, right? Like this, if we're doing that scale of 1 to 10, is this the worst deal I've ever had? You could always do worse, right? You could lose even more than all your money. Now, in a scenario like this on Lofty, I think it's really hard because we do have some limited liability and whatnot. But yeah, I mean, there really always could be a worse deal than the worst case, or the worst case scenario that you can think of. There's always something worse that could happen, right? That Mount Vernon one that got hit by lightning, it's possible that I think it's really great that the insurance had been paid. There could have been a lapse in insurance when that happened, right? Like there's always some scenario where things could be even worse than our worst case scenarios that we're doing when we're creating due diligence. I am hopeful that some people will share some of their war stories. Where what's the worst deal you've been in so far? Feel free to put it in the comments to this video or keep that discussion going over on the Discord. I think that's really it for me for today. Until next time, I'm going to keep just making mistakes so that you don't have to.